The San Francisco housing market just changed and is still changing. The Wall Street Journal recently made a case that a lot of people in the city already felt in their gut. AI is driving a new wealth cycle in San Francisco, and it's already showing up in housing. And after watching this market up close this spring, I think they are so right. And we're just beginning. The AI economy is creating wealth in this city at a speed we haven't seen since the early days of Google and Facebook. And in San Francisco, new wealth has always had one place to go: housing. Now, if you've been watching this market since the pandemic, you know it's been uneven. Certain segments were soft, condos really struggled, some neighborhoods took longer to come back than others, but this spring felt different. And in this video, I want to show you exactly what that means. Whether you're thinking about buying or selling or just trying to understand where the market is headed. Because I think what happened this spring may be the start of something much bigger. Hey, if you're new here, my name is Clay Jeffrey. I make videos about living in San Francisco. I'm also a real estate agent, and my team and I help people just like you make the move to San Francisco every single day. Here's the thing about San Francisco: the city hasn't grown the way other cities grow. We're not growing through big population booms. It's not about retirees moving in. It's not through affordable housing attracting young families. San Francisco grows through wealth creation. And when wealth gets created here, it moves into one place faster than anywhere else in the country: real estate. We've seen this cycle before. Google goes public in 2004, the market moves. Facebook's IPO in 2012, the market moves. Salesforce expands its footprint. Guess what? The market moves. Every time a wave of new wealth hits this city, housing feels it first. Right now, we're in the early stages of what might be the biggest wealth cycle the city's ever seen. Anthropic, based right here in San Francisco, just raised $65 billion in a single funding round. Their current valuation, nearly $1 trillion. OpenAI filed confidentiality with the SEC just this month with a valuation north of $850 billion. This is real money, not just some theory. And a lot of the people holding that money, they live right here in San Francisco. And look, the speed of this is unlike anything we've seen before. It took Google nearly a decade to reach the valuation that these companies hit in a few years. Facebook minted hundreds of millionaires back in 2012. What's coming with OpenAI and Anthropic is going to make that look small. We're already seeing it before the IPOs. Last fall, over 600 OpenAI employees participated in a pre-IPO share sale. Collectively, they cashed in over $6 billion. Some individuals hit the cap of 30 million each. That wasn't even the IPO. That was just employees cashing out early. So what does that mean for this market? It means we have buyers walking around the city right now with real liquidity. Not pre-approval orders. We're seeing it in the market: cash offers, no contingencies, buyers moving really fast, properties in Dubois Triangle, the Mission, Pacific Heights going for hundreds of thousands over asking. One Pacific Heights home listed just under $4 million, sold for $7 million. I heard somebody get quoted recently saying that there is a mansion deficit in San Francisco right now. This is already happening on the ground. On top of that, something else has shifted. The return to office trend that started as a trickle has become a wave. More companies are requiring in-person work, more people needing to actually be here, and we've also got more confidence in the city as a place worth committing to long term. Okay, now if you're a seller watching this, I want to speak directly to you for just a moment. This is the buyer pool you are selling into right now. People with liquidity. People who have been waiting years for their equity to unlock. People who are not particularly rate sensitive because they're not participating in a traditional buyer finance thing. If they're not paying cash, they're going to put down enormous down payments. They are not shopping for a deal. They are shopping for the right home. If you have been waiting for the right moment to sell, waiting for more certainty, waiting for the market to feel safer, look at who's actually writing offers in the city right now, because this buyer pool is exceptional. And it isn't going to be here forever. When you put all of that together, the money, the confidence, the buyers, something starts to happen in this market. From what I'm seeing on the ground right now, it tells me that we are not at the top of this. I think we are closer to the beginning. All right, so now let's look at what that's actually done to the market, because The spring numbers in San Francisco were unlike anything I've seen in a while. The median sale price for a single-family home in San Francisco just crossed $2.2 million. That's a 22% jump year over year, one of the strongest annual gains the market has seen in years. And there is almost nothing to buy. Right now, there are 216 single-family homes for sale in the entire city of San Francisco. The whole city, 216. That's down 44% from this time last year. The homes that do come to market don't have to sit around and wait for an offer. The average single-family home is selling in 12 days, going for nearly 25% over the original asking price. This is not a balanced market. It's not even close. And if you're trying to figure out what this means for your timing, whether you're buying or selling, that's exactly the kind of thing I help people talk through all the time. My link's in the description. Okay, there's another great story hiding inside these numbers, the condo market. For the better part of the last 2 years, the narrative of San Francisco condos was pretty bleak. Too much supply, not enough demand. Remote work really killed the case for paying a premium to live close to an office that wasn't requiring you to show up. That story's over. Just a year ago, San Francisco condos had 4.4 months of supply on the market. That's what we would call buyer territory. That's a market where you have time, you have leverage, you have options. And today, we have 2.3 months. That is firmly a seller's market. The average condo is now selling in 16 days compared to 26 days last May. That's a 38% acceleration. Those buyers who are waiting for condos to bottom out, I think you missed it. And look at where the price gains are concentrated. This is so interesting. 1-bedroom condos are up 9% year over year. That's solid. 2 bedrooms are up 16%, and 3 bedrooms are up nearly 22%. The bigger the unit, the bigger the jump. That's not a coincidence. That's what this new money in a market is actually looking like, because buyers with liquidity aren't shopping for the smallest foothold they can afford. They're buying space. They're buying for the unit they actually want and they'll live in longer term. And right now in San Francisco, those buyers are showing up. And there's something I've been watching with my own clients this spring. For a long time, the mindset was, I'll wait for rates to come down, but life doesn't wait. Families grow, jobs change, relationships change. People have stopped waiting for the perfect rate and started making decisions based on where their lives actually are. And to be honest, most of us believe that those 3% interest rates will never be seen again. So that's what the market is telling us. Buyers are buying right now at today's rates. And when they do, in a city with this little inventory, this is what happens. And sellers, quick note, you are not waiting for rate relief to bring the buyers back. They're back. The question is whether your home is on the market when they're looking. And here's where things get really interesting. Here's something that doesn't get talked about enough. Every year around this time, the San Francisco market goes through this predictable shift. Buyers who have been grinding through spring, losing offers, stretching their budgets, finding out what the next interest rate is and adjusting, they get tired. Some go on vacation, some just step back and want to take a breath. So then when those buyers start getting tired, we'll start seeing fewer offers on each home. Now, I want to be clear about what that means and what it doesn't mean. It does not mean that prices are going to fall. The homes that sold this spring have set the new comps. Those numbers are sort of locked in now. A home that sells in July is going to be priced off of the homes that sold in April and May, which means you are buying at these prices regardless of when you transact. What changes is how many people you're competing against. Instead of 8 offers, you might see 3. That's the summer opportunity. Not a discount, a better experience getting to the same price. And here's the trade-off. Sellers know this too. The ones with properties that need a little help, no parking, small outdoor space, a quirky layout, a lot of them will wait. They'll hold out for when more buyers are back and motivated. So what does hit the market this summer? Usually the good stuff, the homes that can stand on their own. You've got less competition, but also you have less selection. For buyers, that means staying ready and being decisive when the right home shows up. You might not have 8 options in front of you. You might only have 2, but you'll have a real shot at getting them. Okay, sellers, if your home is the strong one, if you have parking, outdoor space, the things buyers are fighting over right now, summer is actually a great time to list. Your competition is sitting on the sidelines. The buyers who are active in July, they're serious. They didn't take the summer off. They want to buy. Okay, and this is where having the right agent becomes critical. Some agents check out in the summer too, and I can't blame them, I guess. Vacations, slower pace, fewer listings to chase, but the buyers who get the best opportunities in July and August aren't the ones refreshing Zillow. They're the ones whose agent is still working, still talking to other agents, still plugged into what's coming before it hits the market. Off-market listings don't disappear in the summer. Sometimes there are more of them because the ones that are coming in the fall are on and available now. Sellers who want to test the waters quietly, estates being settled, people who need to move but don't want the circus of a full public listing, those opportunities are going to exist. But you only hear about them if your agent is in the room. If you're serious about buying this summer, make sure your agent is too. Okay, here's the other thing you got to be thinking about. Summer doesn't end quietly this year. What's coming in September is worth staying for. Every fall, San Francisco does a reset. Buyers who step back in July come back in September. They maybe have kids back in school. People are back in the office. The mindset shifts from summer to serious. And in a normal year, the fall market is competitive. But again, this is not a normal year. Here's what's actually happening right now. Both Anthropic and OpenAI filed confidentiality with the SEC this month, June 2026. That's the first formal step toward going public. OpenAI is targeting a market debut as early as this fall. Think about what that means. The engineers, the researchers, the early employees who've been sitting on equity for years, they are about to have liquidity, real money, and a significant number of them live here or want to live here. Goldman Sachs is projecting $160 billion in IPO proceeds this year alone. And that number is not just going to stay in the brokerage account. Some of it is going to come into this housing market. One economist put it simply, San Francisco hasn't seen an influx of wealth at this scale in its entire history. Not during the dot-com boom, not during the Facebook era. This is different. Now layer that on top of everything else that's already in motion. AI hiring is not slowing down, inventory is not suddenly going to double over the summer, and the buyers who couldn't get a home this spring, who lost 3 offers, who got outbid, who decided to wait, they're coming back. All of them. And on top of that, you've got a whole new group of buyers coming in. People who relocated for AI jobs this summer and are ready to commit, people whose liquidity events already closed, people who watched this spring from the sidelines, and decided they are not going to miss the fall too. More motivated buyers, fresh IPO money, almost no inventory, and a wealth engine that isn't slowing down. All hitting at once. I've been selling real estate in the city for a while. We've seen a lot of fall markets, and I think September 2026 has the ingredients to be one of the strongest we've seen in quite some time. I'd hate for anyone watching this video, you, to look back on summer 2026 and feel the same way. If you're thinking about buying, this summer could truly be your window to get ready or to make a deal. Get your financing dialed in, know what you want, have an agent who is working, like me. Because when September arrives, this market is not going to wait for you to catch up. Look, the city has always had a next big thing. The railroad, the gold rush, the internet, now AI. Every cycle, people debate whether it's real. Every cycle, the ones who moved early were glad they did. The ones who waited, they paid for it. If you're looking to buy in San Francisco, you have to watch this next video right here. San Francisco real estate moves fast and the details matter. If you want a straight read on where things stand right now, my team and I are easy to reach. And if you're thinking about selling, we do free consultations, links in the description. Please subscribe if you want to see more, and I'll see you next time.